Welcome back to the channel, guys. I just wanted to do a kind of a wrap up for 2025 and also looking at some things for 2026. And I thought it'd be quite a fun thing to look at what the global ETF kind of performance was like across the world. It's been a busy period out there, and it's difficult to always focus on what's happening and whether certain countries are doing better than others, and everything seems quite US focused. But the kind of global economy is about $117 trillion. So it's a huge market. Actually, so we're going to go through each of the country's performance, look at some of what 2025 looks like, what has been, I should say, and what 2026 will look like, what's predicted. So let's jump straight in. So the top performer was actually South Korea with 68.81%. And we'll look at why that might be. I think some people will probably have a fairly good guess as to why that might be. So the global GDP leader is still the USA with $30.6 trillion. The top sector inflow was, no great surprise, semiconductors. The fastest major growth, however, happened in the Indian market at around 6.6%. And the sort of key asset classes was obviously Bitcoin and gold. So if we look at the kind of the top performers for 2025, as I said, South Korea, and the main driver was the tech and semiconductors with all the AI that's going on. It was at 68.81%. Interestingly, South Africa did really well because of commodities and reform, and it did 60%, which is great. And then Spain came in where banking and tourism get around 60%. So quite big returns of the top three. The underperformers was Saudi Arabia. Oil price volatility didn't help, so they were down 12.82%. Indonesia had a lot of export growth impact, and that was 9%. And then Turkey had inflationary and currency issues, so again, that was down 9%. So if we were to look at this as a sort of global heat map here, we can actually see that a lot of the strength actually occurred in the European region, with Spain and some of the other European countries doing quite well. It's interesting to see that change here. We can also see Central America. Mexico did quite well, but there was a lot of reds across the board in the Asia regions, and we'll look at why that is, with the exception of a few in South Korea. Okay, so if we look at kind of the performance here, we can see that, as I said, South Korea, South Africa did very well at 60%, Spain around 60%, Poland again 58%, and Italy 45%. Egypt struggled, along with Turkey, as well as Indonesia, Saudi Arabia, and Argentina. So let's start to look at what's happening generally. So for 2025, if we look at the flow in terms of performance and capital direction, Bitcoin and digital assets had quite the largest inflow. It was around 85%. Semiconductors, as we know, have done very well this year with a 45% inflow. And then gold and precious metals, again, have done very well. So gold and silver have been a good run, and that's had 32% of inflow. Where we've seen some outflows is global energy, oil, 5% reduction, and Chinese real estate has had a 15% outflow. So when we look at the outlook for 2026, it's looking like crypto is bedding in now, and we expect that to have high impact. What that will look like, not sure, but it's something to keep on people's radar. I expect a clean energy rebound, and the markets are predicting a 30% rebound there. And then we've obviously got the other things like copper and critical minerals at 25%. What's interesting is consumer discretion is expecting a slight pullback around 8%. So again, these are all just projected flow assumptions at this stage. In terms of the FX headwinds for kind of UK investors, we're doing well against the USD. Against the euro, fairly neutral impact. Rising yen is going to impact us a little bit. And then we've got a weak emerging market from the Asian market and things like that. So there gives us the idea of the kind of the FX impact that we're anticipating. So if we were to break this out into kind of the regional thematics now, the chip supercycle, so South Korea has obviously seen that 68% boost, along with Taiwan at 16%. They're riding the massive wave of the AI infrastructure, the memory chips, the DRAM, the new oil, if you like. And we can see that the top holdings there, Samsung, which has a 45 weight percentage in terms of tech. So semiconductors have done really well this year. It'll be interesting to see whether that continues into next year. The European Renaissance. So we've seen Spain go up 60% and Italy go up 42%, sort of outperforming on services, tourism, banking, benefiting from that rate normalization. So the PE ratio is quite cheap, and the driver is obviously the tourism aspect. When we look at it from a hard aspect perspective now, gold being one of those, and we've obviously seen the crypto space blow up as well. Fears driving those flows into non-sovereign assets. So Bitcoin's up 85%. It joins gold, which is up 32% as a primary treasury reserve and assets for corporations. So we might see Bitcoin, it's decoupling from tech potentially over the next year or so. It'll be interesting to see whether that actually happens. From a valuation perspective, if we look at India now, it's recoiled in terms of a negative 5.5% valuation wall. It's got high PE ratios of 24x, and tariff fears are causing foreign outflows despite a 6.6% growth in the economy. Again, it'll be interesting to see whether we see a rebound in India next year, despite the pullback that we've seen this year. When we look at the Latin America mix, so Mexico's had great growth, 42%. Friend-shoring, US companies moving supply chains closer to home boost that manufacturing. The currency, the peso strength has gone up, and it's an 80% distribution to the US. What's interesting is obviously we always put a lot of faith in the giants, so the Chinese and the US market, but generally they've struggled compared to the rest of the world, and we can see that with the numbers here. So China, 21%, US, 8.5%. So US steady but muted, and China's recovering from that real estate low and the volatility. The US GDP is still 30.6 trillion, and Chinese is in a stimulus mode right now from a recovery perspective. So if we were to break these out into the actual real world numbers now across the board, we can see South Korea, its 2025 returns was the best at 68.81%. Its GDP, 1.8 trillion. So real GDP growth is 2.2%, and it's had a 3-year return of 52.22%, which is incredible. South Africa is a very interesting one for me. I didn't expect it to be on this list, to be honest, but it's done really well at 60.88%, GDP 0.4, and it's got a 1% real-term GDP. Even the 3-year growth is 76%, which again surprised me. Spain, as I said, has had good recovery at 60%, $1.7 trillion, real GDP growth of 1.9%, and 135% growth in 3 years, which is incredible. Poland, another country in Europe, so 58%, again, just under $1 trillion in terms of GDP, but real GDP growth is incredible here at 3%, and its 3-year return is 123%, so even better than Spain's. Italy, we know it's had a bit of a rough time, but it's starting to see the recovery now. It's at 43%, GDP is at 2.5 trillion, so only real GDP growth of 0.5%. But what's impressive is its 3 years is 115%. Now, if we go to the Latin America region, Mexico has done 42%. GDP is 1.9 trillion. Real GDP growth, again, is really good at 2%. And 3 years has been 39%. If we look at Brazil next, it's 32.42%. GDP is at 2.3 trillion. Real GDP growth is again really good, 2.2%. And the 3-year return is 24%. Germany, another European stalwart. The 2025 returns have been pretty good, 26.79%. GDP is obviously much larger than most on this list at 5 trillion. So the real GDP growth is quite small, but the 3-year return has been very good at 70%. Canada, and just under 25%. GDP is again fairly sizable at 2.3 trillion, and its real GDP growth is 1.2%, and its 3-year again has been pretty good at 56.73%. I was actually surprised to see that GDP of Canada is the same as Brazil, which surprised me. Next on the list is Vietnam at 28.5%. It'll be interesting to see how the tariffs work out there. But in terms of real GDP growth, it's actually been 6%, which is really big, as you can see, compared to others on this list. And its 3-year has been 45%. Pakistan, it was surprising to me because it's at 24% for the year. GDP's 0.35 trillion, and its growth is compared to its 3.5%, and its 3-year is 129%. I expected, based on what I thought of what's happening at Pakistan, I expected it to be much lower down the list, but it's done pretty well. UK now, 23%. Again, fairly large market, $4 trillion. So again, the GB is 1.3, and the total return has been pretty good, 48% across the 3 years. Sweden next at 22.64%, fairly small market, but a good GDP of 1.5% and a 3-year of 42%. China is next at 21.24%, massive market, 19.4 trillion, 4.8% GDP, and a return of 23.65 across 3 years. France just comes in under 20% at 3.4 trillion and fairly small GDP growth of 0.7% and a 3-year return of 37.71%. Switzerland next, just again under 20%, 18.2%, fairly small market, just under 1 trillion, good GDP, 1.3%, and a 3-year return of 22%. Japan next, 17.62%. Again, fairly large market in Japan, $4.3 trillion, GDP of 1.1%, and 3-year return of 46, almost 47%. Kuwait next in the list at 17.51%. Fairly small market, actually, 0.18 trillion compared to the rest, but the GDP is fairly large in comparison at 2.5%, and total return is fairly low at 12.13% across 3 years. As we said, Taiwan has done well with the semiconductors recently. Of late, it's 16%, and it's just under a trillion, and it's 3.1%. So that GDP is quite high due to the kind of what's been happening with semiconductors. 3 years is 74.41%. Next, we have Netherlands at 14%. Again, fairly large market. Again, I was surprised. I thought the Netherlands market was smaller than this, but 1.1 trillion, around about 1%, and the 3-year return is 42.46%. Chile next at 12.5%. Again, fairly mid-sized market for the size of the country, 0.35 trillion, fairly good GDP at 2.1%, and 3-year return is about 15%, fairly low, but that's to be expected. This one surprised me. Singapore, it's 10%. Market's fairly small, 0.55 trillion, but GDP is good, 2.3, but the actual 3-year return was 12.5%. For some reason, I thought it would be a little bit higher than that, but yeah, that one surprised me. And then USA, quite low down the list here, as we can see. So total return was 8.5% for 2025. Again, the market cap's obviously the biggest on the list at 30.6 trillion, dwarfs all the others. Its GDP is again fairly good considering the size at 2%. 3-year return is again really good, 65% for the 3-year return, which is why it's so popular for the investors. If we look at the UAE next, 2025 was 7.2%. Again, fairly small market, but again, very high GDP at 4%, one of the highest on the list, in fact. And then its 3-year return is around 18%. Now, this is another surprise for me. Malaysia, it's less so the return of 5.286 on the market, but its GDP is 4.5%. I think it's one of the highest on the list again, which surprised me. Its 3-year growth is just under 20% though. Australia, again, a little bit disappointing. I thought Australia's growth would be slightly higher. They do a lot in the minerals and mining space. So the 2025 so far is 4%, fairly decent market size, 1.8 trillion. GDP is again fairly decent at 1.5%, but the 3-year is only 16, just shy of 17%. Colombia, fairly low at 2%. Market is very small at 0.38 trillion. GDP is still pretty good, 1.8%, But unfortunately, the 3-year growth is pretty woeful at negative 5%. We've then got Thailand next, which unfortunately had negative returns of just under 1%, fairly small market at just a half a trillion. Its GDP was still positive though at 2.7%, but the negative 3-year return is negative just under 10%, so not the best. So India definitely surprised me. I expected better performance from India, but I think some of this is a retrace. It has had massive growth, a bit like China did. So its 2025 is negative 5.55%. Again, the market is huge and growing in India, 4.1 trillion. GDP is still very good. I think it's probably the highest on the list at 6.6%, but its 3-year return is only 20%. So again, I don't know whether India is going to pick up next year. It feels like it's a bit undervalued from an emerging market perspective, but there's a lot of competition in that space. So it'll be interesting to see. It's almost like a market within itself, like China, due to the size of the country itself as well. Okay, if we look at Philippines next, again, negative 6.56, 0.5 trillion. And again, GDP's great at plus 6%, but its 3-year return is negative at minus 7%. Egypt struggled, and Egypt's economy relies a lot on tourism as well. And so its return has been negative 8% for 25. Very small market, 0.38 trillion. GDP is still good at 3%, but its 3-year return is minus 25%. Okay, if we look at Turkey next, negative 9%. Again, Turkey's had a bit of a rough time with what's been happening with inflation, etc. But the market size is pretty decent. It's 1.3 trillion. GDP is again positive at 3%. And then we've had a negative 25% for 3-year returns. Sorry, positive 2.868% for the 3-year returns, beg your pardon. If we look at Indonesia next, again, negative 9% return. Again, Indonesia's got a good market size of 1.5 trillion. I didn't know it was bigger than Turkey's. And its GDP's been really strong at 5%, but unfortunately its 3-year return has been negative 19.52%. And then the final two on the list, Saudi Arabia. As we know, the oil situation is pulled back, so we'd expect some hit there for the Arab countries. Negative 12.82% for the year. Again, the market cap's pretty decent, 1.1 trillion. GDP is 2.5%, but the 3-year return is a negative 4.74%. And finally, we have Argentina, which has had a negative 15.5% return for the year. Fairly small market at just under half a trillion. It's just about positive in terms of its GDP. And then the 3-year is 55%. So it's had a good 3-year, not so great for the 1 year that we're currently in. So there you go, guys. That was a summary for kind of the market and macro data and the returns across each country, the 2025 returns, the GDP, the real GDP growth, and then 3-year returns. Again, thanks to 100% Club to get into this video. Hopefully it was useful and it was insightful. Obviously, treat this as education only and not financial advice. And I will catch you on the next one.